Hey, it's Nick here and you're in the Transparent FX Academy. I'm a top author on TradingView and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Very often we speak about gold. However, it's been quite some time that I made a breakdown here on YouTube on silver. So that is exactly what I will be doing into this video. Into this video, I will give you a full breakdown of the situation that we currently have on silver to see where we can be looking for the next opportunity on it. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds and the biggest speculators in the market are doing on this commodity. And by the end of the video, by putting together these two different types of analysis, we will be able to understand where we have the best probabilities in this market. Now, as usual, let's start here from the monthly time frame. Now, here on the monthly, what we can see. Now, on the monthly time frame, we can see that the market has just provided a nice impulse to the upside, followed by a correction. Now, generally speaking, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has retraced exactly to the 0.382 of the Fibonacci taken on the impulse leg. And after a market corrects to the 0.382, you do expect the market to provide the continuation to the upside, possibly even for the creation of a higher high. However, there is another interesting thing that we can see. We can see that in creating this correction, the market has also printed a W formation, move to the downside, retracement, move back down, and move back up. Now, generally speaking, after a W formation, what you expect is for the market to create a move to the downside, to go and complete the pattern at the previous resistance, now turned support. And in fact, we can see that that is exactly what the market has just done. The market went down, tested the previous resistance, turned support, which is also the neckline of this W formation, and is currently rejecting the neckline. So it is rejecting the previous resistance, which is now turned support with a nice move to the upside. So at the moment on the monthly, the market is quite bullish. Going down on the weekly time frame, what do we see? Now, here on the weekly time frame, we have a quite similar scenario. In fact, also here on the weekly, we consider the market had provided a W formation. And as I have just said, after a W formation, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance, now turn support. And in fact, that is exactly what the market did. The market created a nice move to the downside, went and completed this W formation at the neckline, which is the previous resistance, now turn support, and currently the market is providing the continuation to the upside, rejecting this previous resistance, which is now turned support at this area. Now, generally speaking, if you have an impulse in the market, like we had in this case, and we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And by taking our Fibonacci from the low to the high of this impulse, what we can see is that the market retraced exactly to the 0.786 of the Fibonacci taken on the impulse leg. Now, if you're asking yourself, why did the market stop exactly at the 0.786? The answer is pretty simple. The reason for which the market stopped exactly here is because this 0.786 was the Fibonacci level that was aligning the best with structure. In fact, we consider the previous resistance, turn support, which was also the neckline of this W formation, was lining up perfectly at this area. So this was a confluence of support area, which the market tested and rejected to the upside. Going down on the daily time frame, what do we see? Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, from a daily perspective, the price action of the market has been very predictable lately. I spoke about silver when the market was here. I made a full breakdown explaining all the reasons for which we expected the market to create this move to the downside. And in fact, That is exactly what the market did. Then after this impulse, I made another breakdown explaining all the reasons for which we expected the market to provide a retracement, at least, to the 0.382 of the Fibonacci taken on this impulse. And again, that is exactly what the market did, and the market even exceeded the correction and went all the way up to the 50%. And with the very last with the very last analysis that I made here on silver, I explained why after the creation of this information, we expected the market to provide a move to the upside, which is in fact exactly what the market is doing. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. But at the moment, what do we have and how we can be looking for the next opportunity on silver? Now, before I show you that, let's first go and see what we have from a COT perspective, so commitment of traders perspective. Now, what we can see is that with the last reports, net positions have been increasing. We went all the way down from having 23.5k net positions, increasing and increasing and increasing and increasing, reaching 57.2k net positions. And at the moment, we are still sitting with a quite high net positioning with 52k net positions. So in the long term, silver has been extremely bullish, and we see this reflected also in the price action. We can see a clear bullish trend developing because hedge funds, the biggest speculators in the market, have been buying silver. However, in the short term, what we can see is a decrease of the net positions, meaning that some profit taking is happening here. And in fact, the market has been creating this correction. So at the moment, we can still expect some short-term weakness. Now, going down on the daily time frame, this is exactly what we needed to see. Why did we need to see that in the short term net positions were decreasing? Because this shows us that at the moment, we still don't see proper buying. With the last two reports, first 2.8k longs got closed from an institutional perspective, and again, with the last report that we have available, 3.8k longs got closed again. Now, obviously, no shorts are getting added. However, longs are still getting closed, meaning that the profit taking might not be over yet, and we can still expect the market to provide other corrections, which brings us to the next opportunity. In fact, here on the daily, we are creating a nice overextended W formation. Now, as I have already said at the beginning of the video, if you have an overextended W formation, this is usually a bearish pattern, and what the market does most of the times, it creates a retracement to go and complete the pattern at the previous resistance, now turned support. So how we will be approaching this kind of opportunity and situation with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. So with students, what we will be doing is monitoring price action from a 4-hour perspective during this move to the upside. And what we will be waiting for is for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding silver to our watch list. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete this W formation, at least at the 0.382 of the Fibonacci taken on the impulse here on the daily time frame. But overall, we would like to see the market make a move all the way down to test this previous resistance, which is now turned support. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.